Money FM 89.3, best of breakfast. Mind your business, only on Money FM 89.3.
Welcome to Mind Your Business. I'm Imad Akhtar with Audrey Seek. Audrey?
Yep.
You can run. You can run very far.
Oh, no.
But you cannot hide. No, we're not talking about Audrey Seek. We're talking about what it feels like with Trump's latest tariff agenda, which has been engulfing global markets for days now. And after holding relatively stable during last week's global market turmoil, cryptocurrencies have joined the sell-off as well.
Yeah, so let's turn to the world's most popular cryptocurrency, Bitcoin. It had been holding its ground for a while, but it has now slipped below the $80,000 US dollar mark, a level we haven't seen since Trump's election day victory last November, which sparked a major bull run in crypto. So what's behind this dip, and what would Trump's new tariff plans mean for digital currencies?
Yeah, we're also narrowing down and talking about the biggest crypto theft of all time. If you haven't already heard, a couple of months back now, North Korean Lazarus Group sent shockwaves through the global digital finance community after orchestrating a staggering $1.4 billion Ethereum heist.
So it's officially one of the largest thefts in crypto history. So today we're asking, what do these developments mean for the crypto world, from pricing and investor confidence to cybercrime and security? And what can businesses do to fortify defenses and mitigate risks? Joining us to make sense of all of this is Jonathan Levin, CEO and co-founder of Chainalysis, one of the leading blockchain data platforms globally. Good morning, Jonathan. Thanks so much for joining us. Great to have you.
Great to be here. Thanks for having me.
Yeah, Jonathan, you've joined us at the perfect time while markets are in some serious turmoil. Now, virtually everyone in the cryptocurrency world celebrated the second election of President Trump, an enthusiastic booster of the industry who promised to turn the U.S. into the crypto capital of the planet. But now Donald Trump is presiding over a big Bitcoin crash. Since Trump announced his global tariffs last week, the price of Bitcoin has plunged 10%. So first and foremost, what's your take on the impact of these tariffs on the crypto world, as well as some of the reaction behind the latest price movements?
When you look at crypto assets in general, they are typically a risk-on asset for many of the different crypto assets in the crypto economy. And really, Bitcoin has been the only asset that has some degree of the sort of gold hedge that, traditionally assets like gold have had in traditional markets. And so, Bitcoin was definitely holding its own even through last week. And, through the weekend, you saw that even as people anticipated sort of greater dislocation in capital markets, that there was unwinding of positions on Bitcoin to potentially also cover capital calls, margin calls, or just fleeing into cash, given that there would be greater turmoil in global markets. And so I don't think it's that easy to see exactly how Bitcoin or any of the other cryptocurrencies are going to trade over a period of greater instability in global markets. But Bitcoin continues to be seen by some people as really a hedge against some of the dislocation in broader capital markets.
So some analysts are saying, Jonathan, that crypto is still moving in lockstep with the NASDAQ, even after all of these years. So do you think we're still looking at a strong correlation between crypto and traditional tech stocks, or is this just a temporary kind of blip? And where will prices go from here, you think?
I think that when people think about crypto, they think about what is the future of finance. And really, some people invest in cryptocurrencies and Bitcoin specifically and Ethereum as a proxy for more people being able to move money using cryptocurrencies. And I think that one of the things that you start to see now with the advent of stablecoins is you actually see real-world usage of cryptocurrencies that actually fade into the background in a very similar way to how the largest tech stocks that are driving the U.S. markets, how they have become a part of our everyday lives. And so when there is potentially a slowdown in some of the consumption in everyday life, that is reflected on the prices that you see on those larger tech companies. And in a very similar way, the success of crypto is not necessarily sort of the price of Bitcoin or Ethereum, but it's really about whether they are appearing in our everyday lives.
Yeah, Jonathan, just curious to know whether you think tariffs on some of the imported technology like chips and mining equipment could impact the crypto mining industry directly or indirectly.
There is definitely going to be an impact about the chips that go into Bitcoin miners in particular, and some of the mining equipment for other networks is something that has been typically produced in Taiwan, and so to the extent that chips in general are going to go up in price, this is something that will affect the capex of the Bitcoin miners domestically in the United States. But there's lots of different locations where the Bitcoin mining network is mined, not just in the United States. And so you would expect to see some reallocation if those companies are not going to get the same sort of capex that they were experiencing before.
All right, Jonathan, we talked a lot about traditional cryptocurrencies like Bitcoin and Ethereum. What about the other kind of coins like meme coins, which we know are generally created for entertainment or speculative purposes? Do we see the trends pretty similar across all of the coins?
What we've seen is that I think that in general, meme coins or sort of more speculative assets out there are very much a risk-on type environment. And so I think that when people are feeling buoyant in the stock market and interest rates potentially go lower, there's a lot more willingness to participate in those types of activities. And so I think that, as there is a potential crunch in global markets, people will be moving towards assets like Bitcoin, and you've seen that Bitcoin's dominance as a percentage of total outstanding value in crypto has risen quite significantly over this time period as people think about a flight to quality.
Yeah, Jonathan, do you think tariffs may also influence illicit crypto activity like sanctions evasion, cross-border money flows, things like that?
I think that when you come to the impact of crypto and tariffs and sanctions, there is potential for abuse of these things. And you see a lot of narrative around how tariffs are being levied against countries, and that the negotiations that will take place are not just on the official rates of tariffs at the border, but the ability to evade those tariffs or get around those tariffs. And so you've started to see a narrative develop about the actual cost of importing and exporting goods. And to the extent that stablecoins are being used for import and export, which is increasingly popular in global markets, there definitely could be a greater role for crypto to be played. And the good thing is that actually the transparency of the blockchain will allow for investigations to happen into seeing how some of these import and export markets are evolving using Chainalysis as an example.
Yeah, we'll hold off on the tariff talk for the time being and rewind the clock back about a couple of months to February this year when the Bybit hack occurred. This latest single attack alone surpasses the total amount North Korea stole in all of last year, marking a 58% average year-on-year increase in stolen assets from 2023 till date. What are your initial thoughts on that attack? How would you assess the scale and sophistication of it?
Yeah, the Bybit hack was definitely one of the most sophisticated attacks that we've seen in recent history in crypto. And it was actually very reminiscent of DPRK's attack on the SWIFT network a few years ago, where they compromised some machines at the Bangladesh Central Bank and wired 70 or 80 million out from there using actually custom-made software to change how the printers at the office of the Central Bank of Bangladesh worked. And that's a really good analogy about how they managed to infiltrate Bybit to steal $1.4 billion, is that they actually changed what was being displayed on the user interface of the signers at Bybit. And that really meant that they didn't know exactly the transaction they were signing. And hackers managed to make off with $1.4 billion worth of Ethereum and some other currencies. And so this is a really sophisticated, targeted attack on Bybit by DPRK. And we have seen a much greater interest in making sure that when you are signing cryptocurrency transactions of that value, you have the proper protections in place. And we at Chainalysis have been doing some work with our recent acquisition of Hexagate to help centralized services like Bybit protect themselves against this type of attack.
Yes, and looking at the scale of this kind of state-sponsored cybercrime is terrifying. So let's talk defense here. How do blockchain analytics tools like the ones that Chainalysis develops, how do they help businesses kind of prevent these attacks or recover when they do happen?
So what we realized at Chainalysis is that we definitely have our depth of experience about blockchain analysis, and I'll talk about how that helps freeze money from, the theft. But really, we realized at Chainalysis that we needed to go before the transaction happened. And so we acquired a company called Hexagate that was really all about understanding malicious transactions on these networks, bad actors getting into your network or compromising a smart contract. And what we found was that there hasn't really been a major player that can detect all of these types of vulnerabilities and the transaction flow, making sure that organizations, banks, even individual users have the ability to recognize these malicious transactions. And so we've really launched the ability for all of the enterprises that are transacting in crypto to understand what transactions they're signing in real time and help prevent this type of attack. But if this attack does occur, that's where traditional Chainalysis comes in. And we helped freeze over 40 million, and I know that's not a large percentage of the total value stolen, but instantaneously we helped freeze 40 million of the money that was stolen by notifying one of our customers that actually some of the assets being stolen could be frozen by their service. And so that's the sort of thing that by working together across the ecosystem, we as Chainalysis are able to help freeze money that's being laundered.
Yeah, Jonathan, final question before you go. There are a lot of small businesses, startups entering the crypto space that are listening to our conversation right now. So do you have any words of advice for them as well as crypto business owners and leaders as to how they can future-proof their security systems and minimize the risk of becoming targets for high-profile attacks like the one we've just talked about?
I would say that security is something to be taken seriously from the beginning. Look at some really trusted vendors that you can rely on, where you can help design the right processes of protecting customer funds and operational funds. A lot of those vendors have best practice guides and don't take shortcuts in setting up any of these systems. And once you have these systems set up, it's so important to invest in monitoring capabilities so that you actually have awareness, because oftentimes, even with the best planning and the best security, things go wrong. And having the observability about those incidents leads to your ability to be able to recover and, combat those illicit actors who are targeting your company.
All right. Well, from the impact of global politics in crypto pricing to the growing sophistication of cyber threats, today's conversation reminds us that strong security in the world of digital assets is more important than ever. Jonathan, really appreciate your time. Thanks so much for joining us on The Breakfast Show.
Thanks so much for having me.
Yep, cheers. That's Jonathan Levin, CEO and co-founder of Chainalysis. Stay with Money FM 89.3.
To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.